Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah. You're watching Indian Open. Let's go straight to the headlines at this hour. Asian markets trade only marginally in the green as geopolitics takes center stage after the G7 fiasco and ahead of the Donald Trump-Kim Jong-un meet. And that meeting, and Donald Trump and Kim Jong-un arrive in Singapore for the historic bilateral meet slated for tomorrow. US President Donald Trump leaves the G7 summit in disarray. His advisors accuse the Canadian Prime Minister of deceit. BSE and NSE decide to put all companies currently undergoing insolvency proceedings under the additional surveillance norms. And India wins the Intercontinental Cup, beating Kenya 2-0. Indian captain Sunil Chhetri is now at par with Messi on international goal count. And that's some headline, just that it doesn't take center stage as much as cricket headlines do. Anyways, that's it. Yeah, we'll get there someday. Anyways, let's take a look at the trade setup for the day. The global markets haven't reacted too dramatically to what's happened or what hasn't happened at the G7 meet. We all know now what has failed to happen and how Twitter was very active from the US President Donald Trump's handle. While the US markets did what they did, but Asia, which a lot of people believed, will Asia react too negatively to what is arguably a G7 failure and Trump's rhetoric of enhanced trade tariffs or auto tariffs across the world. I don't think Asia has reacted too negatively to that. So we par for the course, about 0.25% for almost each of the indices, up or down. SGX Nifty 2 showing that. So Asia has looked relatively stable this early morning. No big repercussions of what Donald Trump has done or hasn't done at the G7 meet. Maybe tomorrow's meet is probably on the minds of investors and traders by and large, and arguably the Fed meet over the week as well is something that is very, very important and more crucial maybe. The trade setup for the week, I think we've had 3 consecutive weeks now of an uptick. Friday we did what we did, but for the week we ended about 0.6 or 0.7% higher, which extends the winning streak to 3 weeks. There was a lack of sustainable momentum though, however, leading up at higher levels. So we failed to really go up in a dramatic fashion, bypassing all the levels. What we did see in Friday's session though was remarkable options activity. It was a fair bit of options activity, presumably hedging activity down on Friday, but the volumes and the levels that come out showed that while futures activity was muted, the options activity from the FI side was very, very active. Well, not surprised there. Maybe some hedges being put into place. And I think all eyes will be now on the Donald Trump Kim Jong-un meet outcome, if anything. But I believe that while that is there on the minds of almost everybody who's tracking news, on the minds of investors, the Fed meet and the ECB commentary, more importantly, which comes out later this evening, later this week, is also very, very crucial. Do they hint towards significant pullback or quietening down of what's been remarkable amount of money put into the markets over the last few years? That is something that the markets will be keenly watch out for. So ECB as much becomes a very, very crucial bank statement to watch out for during the course of this week, as does the Fed. However, what about today and now? We've established that the markets at least show no nervousness, so we may start off flattish, maybe marginally in the green, but no negative cues to dominate our trade. But what about specific stocks? 3 or 4 names that I thought we should watch out for. One, I don't know if ICICI Bank reacts or not, but the US market regulator will going to watch ICICI Bank and Chanda Kochar as well. So this is something to watch out for. This is something that was, of course, declared during the weekend. But let's see if ICICI Bank reacts to it or not. MGL, a stock that's been beaten down left, right, center. They have hiked the piped natural gas and the compressed natural gas prices by 1.5 rupees per kg for piped natural gas. CNG prices are slightly lower than that, but there has been a hike nevertheless. Let's see if there is a hike in the stock price of MGL in today's session or no. Inox Wind, again, something similar to Edelweiss really, and not like 1%. The auditors have resigned due to time constraints. This has been very well declared. They have not said that they have not gotten details from Inox Wind, but you know how the market is these days. They try to punish a stock with the whiff of reason. This is not enough a reason, but let's wait and watch if the market turns a bit nervous. Remember, Edelweiss declared that an auditor was going out, an equally reputable auditor is coming in. The stock ended up 5% lower that day. Let's see what happens to Inox Wind. It's not as strong a stock as Edelweiss as well, so let's wait and watch if there's a reaction thereof. And something that Yash will speak about a bit later on in First Word, but sugar prices, they are back to pre-crash levels, not cash levels, pre-crash levels, excuse our typo there. But remember, the sugar prices started correcting from about 3,200 all the way down to 2,600, 2,500 or slightly lower than that at the retail, at the wholesale level. They've now come back. There has been at least a 20% uptick if you look at the prices that ended on Saturday. So there is a remarkable pullback in the sugar prices. The stocks are not showing that. The question mark only is, will they show that or no? But the prices are up and active, so do watch out for the sugar names, if not just in today's session, then over the course of the near term. We will talk about that, but let's tell you all that we have on First Word today. We go over to Singapore for the latest on the meeting that has a lot riding on it. Stephen Engel of Bloomberg News joins us from the Sentosa Beach Resort, the venue for the Trump and Kim meet. Trump's last multilateral meet didn't end well, though, fueling fears of a trade war escalation. We talk about that. As I said, sugar prices are back up from 15-month lows after the government offers another bailout package. Yash Johnson to take us through those details. And then a remarkable research piece from Amit. No luck for small and mid-cap stocks, because Amit brings in and tries to see if there are some stocks that have been beaten down despite decent fundamentals. However, the big news that has dominated all talk over the weekend and which will dominate talk over the course of the next couple of days, the tiny island of Sentosa will be in the center of the world media's attention over the next 48 hours or so. US President Donald Trump and North Korean leader Kim Jong-un have landed in Singapore for a historic meet. Joining us now from Singapore to explain the importance of the meeting is Bloomberg's Stephen Engel. Stephen's there. Stephen, a lot riding on the meet, especially after what's happened in the G7 as well.
Yeah, absolutely. We are here on Sentosa Island of Singapore with the Capella Hotel behind me up on the hill, the site of the venue for tomorrow's summit between Donald Trump and Kim Jong-un at 9 a.m. And yes, a lot is riding on it. And it's interesting, too, you brought up the G7, because does his behavior, Donald Trump's behavior in instructing his delegation not to sign the joint statement in Canada just before leaving for Singapore here, does that undermine his position here? If he's willing to go back on his promises to sign that statement there, what does that message send to the North Koreans? That his word is good, or that he's going to back away from his commitments as well to Kim Jong-un? A lot is riding on it as far as what the United States wants from the North Koreans, and that is complete, verifiable, irreversible denuclearization. Well, Kim Jong-un and the North Koreans probably have not gone through all this effort to build out a weapons program to just give it all up after it's been completed. So that's going to be a very hard sticking point. The North Koreans, they also want relief from the crippling sanctions, but that's going to take a lot of convincing in the United Nations Security Council that they've gotten the assurances that there would be some sort of timetable from the North Koreans that they are on a path to denuclearization. But Kim Jong-un surely is here seeking relief economically from those sanctions. Donald Trump, though, says if he doesn't hear what he wants to hear on some sort of timetable for the disarmament in North Korea, that he has at least 300 more sanctions that he is readying to impose on the North Koreans. Already there's a strict embargo placed on the North Koreans by the United States, and of course sanctioned by the United Nations Security Council. But in 2017, the United States put severe trade and financial embargo on the North Koreans. But there is much more that the United States actually could do.
Stephen, I know it's very difficult to call this one. You don't know what will happen. No one knows, arguably, aside of the two leaders, and probably they will also get to know once the meeting is done. But, the headlines dominating the world media are diverse. There are some which are saying that the failed US-North Korea summit could make armed conflict more likely. Some will say that Trump may not press upon North Korea to surrender nukes so quickly. There might be some bit of to and fro out here as well. What are you learning as you are in the epicenter?
Right. Yeah, that's right, because Donald Trump before had used the terminology maximum pressure campaign. In the last week or so, he has backed away from continuing to use that because he said we're getting along. Of course, the North Korean delegation went to the United States more recently. They had those discussions, and Donald Trump said they were getting along. So they're finding some common ground. In fact, right now, Sun Kim, who is the U.S. ambassador to the Philippines and a key negotiator with the North Koreans for Donald Trump, he is at this hour meeting with the North Koreans here in Singapore at the Ritz-Carlton Hotel, perhaps going through some of the deliverables, if you will, that both sides could take away from the summit tomorrow, a face-saving, if you will. But again, Donald Trump does want to see some progress and at least a timetable, but he has admitted as well that this is not necessarily something that's going to happen in one meeting. It could take upwards of 2, 3, 4, 5 different meetings to get a firm timetable and commitment. Tomorrow, 9 a.m., the handshake. It's a get-to-know session, face-to-face, and kind of Donald Trump has already said, within the first few minutes, I'll know whether or not the North Koreans are sincere or not.
Okay, we'll get to know when we get to know. Stephen Engel, many thanks for joining in today and giving us your thoughts. That one is from the epicenter, though I really doubt we'll get to know much before the event. Remember, one of the Bloomberg articles speaks about how Donald Trump dismissed questions about his readiness, saying that I don't think I have to prepare very much. It's about attitude. It's about the willingness to get things done. Well, that's very loose and very broad. You don't really know which way it'll turn up. But Donald Trump is not in news just for that. The one meet that did not end well is the G7 summit in Canada. Trump and his advisors have since accused Canadian Prime Minister Justin Trudeau of deceit and walked away from the official communique. This move has also triggered concerns of an escalation in the proposed trade war between the US and some of its traditional allies like Canada and France. And that is not a good sign. Here's Kathleen Hayes of Bloomberg News with a complete roundup of what happened over the weekend.
I've covered G5 meetings. I've covered G7 meetings.
G8 meetings.
I don't think anybody has seen anything quite like this in history. So another first for President Trump, which seems to have upended the G7 unity that was with such difficulty put together at this meeting in Quebec. And in fact, the statement itself had been put together, a joint statement. And part of the reason they could put it together is because President Trump was allowed to abstain from climate pledges, and it would look like it was all going to be signed. Justin Trudeau came out of the meetings and said that Canada had been insulted by the threat of tariffs on U.S. autos, right, coming into the United States. That's a big, big deal for Canada, of course, and that they would proceed with retaliatory tariffs if Trump would go ahead with these tariffs on them. So next, President Trump is on Air Force One, and he's heading over to Singapore to get ready for his big summit with Kim Jong-un, and he tweeted out that he was ordering his staff not to sign the G7 statement due to Trudeau's false statements. The reaction from foreign leaders starts with Agence France picking up news that President Macron of France's office was critical of Trump, saying that international steps cannot be dictated by insult and anger. Larry Kudlow, the president's chief economic advisor, said this about what Trudeau had to say on CNN on Sunday.
Stabbed us in the back. He really actually, you know what? He did a great disservice to the whole G7. He betrayed.
Trudeau did.
Yes, he did, because they were united in the G7. They came together.
And basically, Larry Kudlow also said that, in effect, President Trump had to strike out because what Trudeau said was undermining President Trump ahead of this very important summit.
Well, so now you know there's lots that's happened and lots that hasn't happened and raises concerns about imminent trade wars. Angela Merkel is, I believe, on record. I was reading one of the Twitter tweets which spoke about how Angela Merkel said that the attitude of the US president leaves a lot to be desired. Something in those words, really, not exactly, not verbatim. But let's wait and watch. If indeed there are auto tariffs in place, then that, or if they do come in place, then that raises the specter for a full-blown trade war of sorts. Let's see if global markets react to it. Maybe they won't react too much until there is a bite They will not react just on a bark. Anyways, that's all the global news that you wanted to know really about all that's happened over the weekend, summed up in 10 minutes. Back home, a couple of pieces from our research team. First, sugar prices, they are on the rise after the cabinet approved a new bailout package for the sector. The plan is to create a buffer stock and also grant interest subvention for farmers and incentivizing ethanol blends. The question really is not about the measures they have been known, but about the impact that they have had on sugar prices as well. Yash Upadhyay is here with how much the prices have gone up by and what could the way ahead be. Yash, good morning.
Good morning, Neeraj. So the sugar prices, that the M30 variant, which is the medium-sized sugar, that their prices have raised as much as 14% since May 21st. Now hold on to that date, which is May 21st, because it has more relevance. Now let's give you a bit of a background. The sugar season, which starts in October of 2017, saw sugar prices go into a free fall, crashing as much as 31% since October 1st, which is the date when the sugar season starts, until 21st of May, on the back of a strong 55% kind of a jump in the production. Now 21st of May is the first time when we heard about the government coming out with reforms, including a bailout package that would result in the creation of a buffer stock of 3 million tons, a minimum support price to curb the fall of sugar prices. Now, since that news came out, a lot of the sugar traders, the stockists and the bulk consumers, they realized that the sugar prices would inch forward, and in speculation of that, they increased their buying, which resulted in the sugar pricing surging as much as 14%. And now what has happened after that is that the sugar mills, they have been continuously selling, and their inventory limit, that has fallen down. So mostly the three regions that contribute to the most production is UP, Maharashtra and Karnataka. So they have been selling continuously, the sugar mills there, to the other regions such as the northeast, where there are absolutely no sugar mills producing any form of sugar. So because of that, the prices have surged as much as 14%. Now, from what we are gathering, the sugar from Mr. Praful Vitlani, he is the chairman at All India Sugar Traders Association, is that the sugar prices, they would continue to remain in the range of 33 to 34 rupees in the short term for say over the next couple of months, and would gradually stabilize to anywhere between 30 to 32 rupees over the course of this season, and also for some time of the next sugar season, which is 2019.
Okay, Yash, so about what, a 20% uptick from those lows? Thereabouts, 20 or thereabouts?
Yeah.
Okay. Well, let's wait and watch whether the sugar prices or the sugar stocks react duly or no. Thanks a lot for that, Yash. It's been a remarkable uptick, really, for some of the sugar names. Beaten down, though, as they are. But, you know, those names are beaten down with a reason. 2018 has been a tumultuous or a torturous year for small and mid-cap stocks in general. And while some like Gautam Chowchara of UBS attributed to high valuations, others like Rhythm Desai of Morgan Stanley see them recovering over the next few months, even though it's not a V-shaped recovery. That is completely ruled out. But is it possible that some stocks which have given decent returns in the last financial have limited debt on books and sound financials also have been on the losing end in a meaningful way? And more importantly, if they have indeed done so, then why have they done that? So Amit's here to take us through the details. So Amit, first, standard disclaimer, this is not any means of recommendation by Bloomberg Quint, more a study of what some of the financials of some of the mid-caps and stocks are looking like. What are the parameters that you've chosen to determine that these stocks tick some of the right boxes from a fundamental perspective?
So we have selected stocks that have a market capitalization of more than 500 crore rupees but less than 10,000 crore rupees. The second criteria was the return on equity would be more than 35% for these stocks. And the third was that the total debt to equity, there's a leverage ratio, is less than 2 times. So these are the three criteria on the basis of which we have selected these stocks. Okay.
Now, based on these criteria and the filters that you would have applied, what's the list of stocks that comes out?
So among the top stocks, first on the list is Avanti Feeds, with return ratios of more than 50% and a debt-free company, that is total debt to equity is 0. BLS International with return ratios, return on equity of more than 45%, return on capital employed of more than 49%, and a very low debt to equity of 0.36 times in FY18. Maithan Alloys with return ratios of more than 40% and a negligible total debt to equity of 0.03 times. Thirumalai Chemicals with return ratios of sub 40% and a very low total debt to equity of 0.09 times. Then we have on the list, if you get the second plate,
But the list of stocks is more. Okay, there are some.
Yeah, there are 3 more on this list. Jindal Stainless SR, return ratios of 48%, return on equity, return on capital employed is 38%, and these are FY18 ratios. Total debt to equity is reduced to 1.88 times from 3.77 times in FY17. So this is a good thing for the company, reduced leverage ratio. Bharat Rasayan, return on equity of 39%, return on capital employed of 35%, and a very low total debt to equity of 0.43 times for the company. Gulf Oil, return ratios of 38% and 40%, total debt to equity of 0.53 times, and more importantly, the FY18 was a good show for Gulf Oil with year-on-year revenue and EBITDA growth of around 23% and 33% for this company.
Okay, so essentially all of these stocks tick the parameters of higher return ratios, lower debt to equity, and still have been punished. Now,
yes.
Did you manage to speak to people about why is it that I mean, all companies have been beaten down, but what is it that was special about these companies, and what's the outlook looking like?
So for Avanti Feeds, if you see, it was a double whammy. The shrimp prices were falling, and more importantly, the raw material prices used to manufacture shrimp feed that were rising. So the fall in prices of shrimp and the rising raw material prices were the reason for Avanti Feeds, and that's what the outlook is for FY19 also. For BLS International, FY18 revenue growth was very strong, but analysts are believing that the FY19 revenue growth would be down because of the cancelled Punjab government contract that the company has seen. For Maithan Alloys, the FY18 revenue and EBITDA growth was on the back of operational efficiencies and an improved capacity utilization, which could be now limited for the company. And that is one of the reasons. Also, profit booking is the second reason, because if you see in 2017, the stock's value had jumped nearly 2.5 times.
Okay.
Then we have Thirumalai Chemicals. Now, analysts believe that the cyclical nature of their products could be one of the reasons for the fall in the share prices. Then we have Jindal Stainless SR. Now, rising raw material prices, oversupply from China, and profit booking could be the reasons for this. Now, the stock's value in 2017 increased more than 2.5 times. Bharat Rasayan. Now, the company's performance is highly dependent on monsoon, and a third consecutive year of normal monsoon is definitely positive for the stock, and that could be one of the reasons why this stock stood out in that list by giving positive returns year to date.
Okay.
Gulf Oil, rising crude oil prices and a weaker rupee are the key headwinds for this stock, and as long as crude prices are higher, the stock is expected to fall because the margins are expected to contract.
Okay, and Amit, none of the analysts that you spoke to were able to give a convincing forward-looking statement for any of these. I mean, if these are quality stocks and if some of the reasons are temporary, are people turning bullish on any of these names?
As of now, no one gave me any positive outlook for any of these stocks, because there are a lot of other reasons other than stock specific that are taking these stocks down. Okay. Market-related reasons.
Okay, fair call. So Amit, thanks for putting that into perspective. So we all know that it's a tough time for mid caps and small caps, but what we tried to do at this piece was to tell you that some companies which are impeccable on the debt equity ratios and have some fairly decent return ratios as well have also gotten punished. For more on this story, you can log on to our website www.bloombergquint.com and get a snapshot of the parameters that Amit used to shortlist some of the names. What are the names that make it to the list, and what is it that is hurting these companies? Remember, this is not a recommendation list at all, more a study of how some of the good quality mid-cap names as well have also gotten punished. It's well known. These are just some parameters that we've used to come out to a list of sorts. But that's all that we have on First Word today, but lots more lined up on the show. We discussed DLF's recent attempts at shedding debt and get a progress report on its new projects with Executive Director Saurabh Chawla. And remember, can cement companies which have withstood a lot of selling pressure stand strong again with a bit of help from the government expenditure in the election year? We asked Bina Engineer of Sanghi Industries about the same.
Welcome back. You're watching Indian Open on Bloomberg Quint. Let's see how the Asian markets are faring at this point of time. Most of them seem to have a muted start at this point of time. The Nikkei is up almost 0.3%. Similar is the case with the Hong Kong markets, and the Chinese markets are down by 0.5%. The SGX Nifty, which gives an indication of how we will start, it's indicating a gap of just 17 points. It's cool off from the highs of 30 points that we saw in the morning trade. So expect a muted start to our markets. But Agam is here. Agam, what are the FNOQs indicating?
Right, Darshan, let me just start off with the kind of week that we've had, and we did see some strength come through. And despite the fact that we saw the Nifty end, largely flattish, we have continued increase in open interest towards futures. So the Nifty futures saw another 2.5% addition towards open interest. Let's take a look at the Nifty Bank as well. And that is where, once again, we have started to see a resumption of trend of unwinding coming through in a lot of these positions. And of course, we saw, marginal declines on the Nifty Bank as well. So there you have it. And the Wix, of course, also moved down further. But, we really haven't seen too much of the movement in VIX, especially after the RBI policy. Let's take a look at the way things have panned out across, the changes in open interest. And as you can see, for the second straight day, we saw more writing in the 10,600 and 700 puts. And that gives you an idea about the kind of support that we're seeing around those levels. But moving in when it comes to, stock futures, Jet Airways is one of those which has moved into the band, so we're expecting restricted trade there. And in terms of other stocks that we're watching out for, it's Trice Shasun. It saw an up move as much as 3%, a lot of accumulation in open interest towards longs. And we also have Indian Bank in the same list, up as 4.5%. One of those PSU banks doing very well, relatively better than the rest of the pack, seeing an increase of 19% in open interest as well. So a lot of stocks out there to watch out for. And of course, the benchmark indices showing an indication of an up move right now.
Well, thanks a lot for that, Agam. So that's Agam Vakil with all the action that's happening in the FNO space. Let's talk about some of those, because a lot of these were stocks in news as well, or perceived to be stocks in news. Samir Kalra, founder at Target Investing, joins us right now on the show. Samir, good morning. Many thanks for joining in.
Thank you.
PSU Banks, does the fairly long press conference from the interim finance minister enthuse any confidence?
Not actually, because what happens is there's still a tussle between how the power assets needs to be restructured and recognized. So I think that kind of a chunk, because it has to be recognized. Maybe in a different way it gets recognized, but it will hit the books. So whether it happens in next quarter or next 2 quarters, that we'll see. But the only trouble is the NPA growth is much higher than the credit growth. So you're not able to subside the NPA growth and show that, eventually the gross NPA is reducing. Because if your overall book is not increasing and the NPAs are recognizing on quarter, then actually that percentage-wise the number looks bigger as it goes ahead. So I think credit growth is much more important right now as compared to, postponing the NPA recognition.
So are you seeing any signs of that? And part 2 of my question therefore will be that on Friday's session, for example, it's a bit of a short-term question, but on Friday's session we saw a lot of these stocks, UCO Bank, Dena Bank, Allahabad Bank, etc., all move up. SBI is up 10% over the last 1 month. For somebody who's holding on to these stocks in the hope that things will turn around, is it advisable to switch out of these companies?
So it's advisable to be there if you have a long-term horizon. If you have a short-term, then any point is a good point to get out. Because what happens now, the bad bank idea also came back. So there are a lot of options which they are thinking of. And even if a bad bank gets created, the transfer of the assets will be a recognition of NPA. So I think even that goes out of the system, and I think anyone who's there for a short term should get out right now, and rather than expecting a whole big rally to come up, because every option gives a upside or a downside move to the whole thing.
What's your view on IT as a pack? It's up 18% on a YTD basis. It's outperformed, the benchmark by a wide margin. Do you think that the outperformance is here to stay, or if someone who's invested in IT should be cautious now?
So if you were already invested like 6 months back, then you're happy with the returns which you've got, because IT has been underperforming for a long time now. 2 reasons over there, because people were more into cyclical, and the correction which happened in Feb and March led to people more flows towards defensives. So over there the consumption was already high valuation, the IT was, large cap IT was much more reasonable. So that's why there was a flow change, and then there was an exchange benefit. So I think this will be there for next 6 months also. So I think the outperformance should stay here, and any upside to the forex and any risk to the forex, I think that will adjust towards the flow.
Okay.
Okay, interesting. Friday saw a very big upsurge for Sun Pharma, with reason, of course. Darshan was at the center of explaining all of that. Spark also went up 12%. What would your call be on these companies? For somebody who's seen that news and feels like investing, Darshan, I would want your view as well. But what do you think? What should an investor do out here?
So we have been accumulating Sun Pharma since last 1.5 years, and all this kind of a ruckus which gets created, because it's more like what happened when Halol came into system. Sun Pharma, that quality of governance which was there at plants, that came into question. So that's where a lot of investors move out of the firm. And they knew the structural issue will be there for a year or year and a half. It's not something which will get sorted out in the next 6 months. So it's on the verge of getting cleared, and I think over there within that time there have been 2 additional issues: the US pricing and the Ranbaxy synergies coming in. So I think now onwards the whole positive flows will start coming in. Whether the positive numbers, I think, will take a couple of quarters to materialize out of Halol or the US pricing pressure to get out. But I think from the investor point of view, I think it's a good point to start accumulating and start buying if you've not.
Is it priced in? Because most of the brokerages did indicate that the Halol resolution with this 8% move is now priced in, and the future now is specialty. That is something that they're looking at, and Halol is in the price. What do you estimate?
See, I think Halol revenues were never priced in, because the upside which people, the news of Halol getting approved, that might be priced in, and the Friday jump already had taken care of it. But the revenue side, or the next 6 months or next 12 months, how will they change on the estimate side? I think Analyst will take a quarter or a 2-quarter look to revise those estimates towards upside. So I think there's an upside risk in that pricing revision.
Okay, we'll hold on, Samir. We'll speak to our research team. Lots of news, a lot of stocks that you need to watch out for. An interesting note by Goldman Sachs post the 4th quarter earnings, where they've given their preference for the sectors that they like. They've upgraded some of the sectors, and we were talking about Sun Pharma. What are brokerages talking about Sun Pharma, whether Halol has been priced in? What's the view ahead? We are here with the research team. Shraddha, Nikki and Agam are here. Shraddha, first of all, which are the stocks in news?
Darshan, starting off with Welspun Corporation, which has received an order from the US market, though they haven't disclosed the size or value of this order. They've said that with this order addition, the size of the order book now stands at about 11,000 crores. You have one more company, Inox Wind, where the auditors have resigned, citing time constraints. Phoenix Mills is another one to watch out for. They've acquired an under construction retail development in Lucknow for about 453 crores. Goa Carbon, you could see some negative reaction here, because for the month of May, their production has increased by 62%, but the sales are down nearly 20%. Mahanagar Gas, which has followed some of its peers by raising CNG prices by 0.33 paise per square cubic meters, and domestic pipe gas prices by 1.51 per kg. That's mainly to offset the higher gas prices and rupee depreciation. And lastly, PVR, where in a bulk deal on Friday, Baron Emerging Markets Fund sold 1.3% stake. They had about 1.5% stake or so as of 31st March, so near complete exit from PVR. Okay, so these are the important stocks that we need to watch out for. What's the Goldman Sachs report indicating?
It says that it remains overweight as the earning recovery remains underway. The rationale behind it is also because the earnings recovery are firming up, and there have been higher improving ROEs. The leverage has been coming down for these companies. It is suggested that after the Q4 FY18, the results have been dragged mainly by the financials. On back of that, it has lowered the CY, it has lowered the EPS growth for banks for 2018, but then it has retained it for 2019. In terms of sectors, they've upgraded their stand on metal and mining to overweight. However, it remains overweight on sectors like private banks, autos and industrials. In terms of themes, they prefer themes like rural recovery, infrastructure and affordable housing. And also few of the stocks which are on the conviction list include Tech Mahindra, L&T and RIL.
Okay, so we'll watch out for all those stocks. And Agam, what are brokerages talking on Sun Pharma?
Well, naturally, the commentary is turned positive on Sun Pharma. I'm going to start off with Credit Suisse, and they suggest that it will provide strong momentum when it comes to FY19, the halal clearance, and of course, the Emkay 3222 launch as well. And they said that the halal facility clearance aids sales recovery of existing products and sharp increases in approvals. And they see a good upside from current market levels. Goldman Sachs, again, they say the VAI for halal plant removes the FDA compliance overhang, and of course Sun Pharma can now start obtaining new product approvals. And more importantly, this adds credibility when it comes to the management's FY19 guidance for low double-digit top-line growth. HSBC is also of the same opinion that the halal resolution should aid recovery in the US, but they say that a lot of this has been priced in, and as does Macquarie has the same view when it comes to this halal clearance being priced into the valuations. And of course the focus will now shift on Sun's quality of earnings and specialty ramp up, but on the whole commentary remains positive for this development.
Okay, so we'll watch out for all those stocks. Samir, I'll take it from where Nikki was speaking about Goldman Sachs on metals. They've turned quite positive on it. What's your view on this space and anything you like in the metal space?
We are positive on a couple of names only. One is Hindustan Zinc, given that the silver expansion is coming in, and the zinc is already doing around 40 plus kind of a volumes. Over there, we see the benefit of being a high cash flow generating company helping out. And the second which we see is Vedanta helping out. See what has happened all due to the copper mine and the negative news coming in. So there has been a negative flow towards the company, and I think once it settles out, we'll have an upside in the shorter or medium term. So Hindustan Zinc for a long-term bet, and Vedanta for a short-term or a medium term.
Interesting. Okay. So that's, of course, the non-steel companies. By the way, steel, what are the thoughts? SAIL, for example, a lot of people have now started finding favor here.
See, what has happened is the capacities have come in at a higher price, and for them to maintain the margins and maintain the expenses at that point, it's more of company driven. And China steel, it's more on the shutdowns in China. So these can come back as soon as possible, and when they meet the regulatory environment. So a lot of chemical companies and a lot of metal companies have started meeting that environmental issues, and they have been starting to come back on production. So I think that will be a slowly premium which will get out slowly in couple of quarters, I think, if not, because the demand is not that brisk as the supply has become. So I think the margins will be there for a couple of quarters, but the prices have to maintain for that level of capacity to help out.
Okay. Let me ask about a space, Samir, which has gotten beaten down, but now prices are moving up. IGL raised prices last week. Today, MGL has gone ahead and inched prices up a little bit. It's a rupee and a half per kilo of CNG, but nevertheless, there is some pricing uptick that has happened there. Are these stocks, from a valuation perspective, worth a buy? They've corrected quite significantly, I might add.
So if you see all these stocks, their simple business is they compress the gas and sell it out to the outlets. Right? So their margins, what you talk about, the gross margins are eventually that 5% margin they play on. And that is taken as a net revenue to them in a certain sense. The more efficient you are at the cost of every cubic meter which you sell out is the better for you. So IGL over there has an upbeat because IGL volume, if you see the Delhi center and the NCR which they are expanding into, that gives them the higher volume growth. So, and now when there are a lot of these CNG stations and the CNG piping auctions going on, you see a lot of interest coming in. So over there, IGL and MGL have done a lot of bidding in Maharashtra and on the north side for IGL. So if these come in, I think next 2-3 years will be really good to as the volume growth and the new centers to come in. For them, especially the new centers are more important. as in for the volume growth, because once they reach a saturation in a certain territory, they have to have a new territory to suffice that volume growth, play into the valuations. So I think over there, these are a good perspective from a 2 to 3 year kind of.
Which one would you buy?
So I would prefer a IGL, because the north, if you see the north, consumption of gas is much more higher in terms of pipe gas to houses and towards the motor vehicles, because a lot of traffic comes on the highways to over there. So I think a lot of CNG is around 25% of the retail sales in north, as compared to 15% in west. So I think IGL will be a better place.
Okay. Okay, before we move on to our technical analyst, I think there are a couple of needed a lot of news points over the weekend. I was going through some of the news. Here are some stocks that I think we should watch out in today's trade. First of all, I think Reliance will be the biggest one. It's approaching its all-time high. The all-time high is 1011, and that was there in April. So within striking distance, and I truly believe that if the market Nifty has to head higher, Reliance has to take pole position. We saw that on Friday when the HDFC twins were lagging. Reliance did that. Sun Pharma, I'll watch out again, given the fact that most of the brokerages have said that it's priced in. It moved up significantly. It ended pretty much near the day's high, but it's 50-50 what to say on Sun Pharma. IT stocks, are continuing its uptrend. I was just seeing the YTD returns, Neeraj. The IT index is up 18% compared to Sensex 4%, and TCS is at 7 lakh crore. Infosys is moving up, so that is something I'll watch out for. Suven is another stock I'll watch out for. It's up 12% in the last 2 days. Extremely heavy volumes on the counter. Today, MK has come out with a target price of 270. Phoenix Mills has corrected almost 15% from the recent highs, but they bought in an under construction property in Lucknow of 9 lakh square feet, and the management was in Singapore with HSBC, and the management commentary was extremely positive, and they aim to double their annuity revenues, annuity portfolio by 2022. So that's in line. Cinema stocks in focus. Despite Barron's selling in PVR, the counter ended at the day's high. Kalra has released Race 3 is next, so that is you need to watch out for. Girik Wealth has bought into a small company called Worth Peripherals. It's a 125 crore market cap, only listed on the NSE. It ended up 15% higher, but worth a mention. Fortis will announce its numbers today. PNB will divest stake in PNB Housing, ICRA, CRISIL and BSE. They're looking at all ways to raise funds. Avenue Supermarts, it's nearing the 1 lakh crore market cap. It's overtaken Tata Motors, Bajaj Finserv, BPCL, Bajaj Auto. So that will be interesting. It's a counter which probably till now it's on a perpetual uptrend. And two stocks, which were not part of the auto index. Balkrishna Industries and Apollo Tyres from June 18, they will be part of the BSE Auto Index. So these are some of the counters that over the weekend, whatever reading I did manage to spot. Anything that you like, Neeraj?
No, I think that sums it up really. The set of stocks that you should watch out for, in addition to the ones that we've already spoken with Samir Kalra with. So that's the fundamental lowdown on the stock, on the trade today. We'll maybe ask Samir to give us a couple of recommendations too, but it's 8:45, so that time of the show wherein we should move focus towards the technicals. Amit Harchekar, Director at Index Genius Investment Advisors, with us on the show, as is Ruchit Jain from Angel Broking. Gentlemen, both of you, very good morning. Many thanks for joining in. Ruchit, last 3 days, fairly decent, even though you could argue that Friday was a day of consolidation with only a late surge. We're likely to start off flattish today. What would you do on the indices in terms of a trade?
Yeah, very good morning, Neeraj. Neeraj, definitely if we see the last week, then although the initial couple of trading sessions were not that good for the market, but as it's saying in the market that if anything else ends well, then that is very good for our market. So the weekend ended very well for our markets. If specifically if we don't look at the index and we look at the stock specific momentum in the heavyweights, then I think there is no doubt that the momentum continues to be on the positive side. The advanced decline ratio was also very good. So as far as Nifty levels are concerned, 10,650 would be a very crucial support for very short term. So till the Nifty's index is trading about this 10,650 levels, I think the biasness should be on the positive side. On the higher side, needless to say that 10,800 has acted as a resistance quite a few times in the recent past. So traders, positional traders can wait for a closing about 10,800. Once we close about 10,800, then I think that would signal a resumption of the broader degree uptrend which we had seen. But as of now, the trend seems to be on the positive side. One should definitely trade on a positive bias. On Nifty front, one can go long once we get a breakout about 10,800 levels.
Okay, Ruchit and Amit, what are you sensing on the market? What's your broad view?
Well, good morning to all. First of all, we are seeing a very strong position in the derivative segment for Nifty. If you see the open interest addition in Nifty in month of June, we have around 33 lakh shares addition in Nifty open interest, and that too at an average price of around 10,678. So we believe even despite volatility in these markets, we haven't seen any decline in open interest, and that the data suggests the situation is very good for a strong rally in the near term. Similar trend we are seeing in Bank Nifty futures, that in June we are continuously seeing short covering. There has been a decline of around 2,90,000 shares in Bank Nifty open interest, and that has happened with an average price of well about 26,400. Now both indices, if you see, Nifty has been sustaining that 10,660 mark quite convincingly, and similar we are seeing a good sustenance in Bank Nifty futures about 26,420. Now we believe from these levels there could be a launch of a new rally which can easily take indices towards a 10,950 in Nifty terms, and for the Bank Nifty the levels what we are watching out would be 27,500. So we believe both Nifty and Bank Nifty are looking extremely strong for at least 5% rally in the near term.
Okay, so let's try and nail it down to specific stocks. Amit, I'll come back to you only first, and I reckon you too are betting on the large caps, but both on the buy side.
Well, I would say first stock recommendation would be buying SDFC Limited, because the stock has now corrected back towards its VWAP level of around 1840. Again, we believe this level becomes a good entry point for your leverage long positions. So the strategy what we would suggest is buying SDFC futures with a stop of around 1800, and we are expecting stock to again test 1920. Second stock would be Titan futures. Again, stock is now trading towards current series VWAP, and we believe 895 becomes an excellent support levels. We would recommend buying stock with a stop loss of 870, and we are expecting target around 945 to 950. And last stock would be buying Kotak Bank futures. Again, despite sideways movement, we haven't seen any significant dip in open interest in Kotak Bank long positions. So we believe even Kotak Bank is positioned for rally towards the 1400. Stop loss for your long positions would be at around 1275.
Okay, and Ruchit, which are the stocks that you are recommending for today?
I have a couple of buy recommendations. One simple strategy I have used while choosing these recommendations is that both the stocks have been outperforming in the recent past. So stocks which tend to outperform during corrective moves, they usually give more rally when the markets go up. VIP Industries is one of the stock in which we have seen a good outperformance since last few months. Even during the corrective moves in the mid cap, this stock relatively stayed sideways and showed some consolidation phase. So the volumes during last week on the up moves were quite good. This indicates that his uptrend is likely to continue. Traders can at current levels also go long with stock below 414, expecting target around 478. And my second pick is a buy call in Mindtree. Well, this is one of the mid-cap IT stock which has generated good returns in last 5-6 months for traders as well as investors. Well, since last 1 month, prices have consolidated in a range again, which seem to be just a time correction within an uptrend. We believe that prices would resume this uptrend soon. Looking at the volumes of last couple of trading sessions, one can go long at current levels, keeping stock below 966, expecting target around 1146 in short term.
Okay. Stay on, gentlemen. Time for our special segment, Bloomberg Edge now, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, good morning. What's the stock on your radar today?
Morning, Neeraj. The stock on radar today is V-Guard Industries. That's because 57% of the analysts that cover the stock have a buy rating, and the target price is close to 9% above the current market price. And also with Friday's close, there has been a buy indication as per the stochastic indicator. Let's have a look at how the stochastic actually works and what are the conditions that you have to keep in mind. Well, it helps you to identify when a price move is overextended. Recently, we have seen the stock fall from higher levels, and it also measures where the current price is in relation to the recent high or the low that it has formed for itself. A few conditions that you have to keep in mind: overbought is above 80, oversold is below 20, and there are two lines which get plotted on the chart, and a crossover between the two lines gives you the buy and sell signal depending on the direction of the crossover. That's the 6-month chart of V-Guard Industries. So you have seen that, from about 240, 250 levels, it did fall below the 200 level. What we have seen is last 3 days there have been green candle, which is on the positive side, and the bottom panel shows you the stochastic indicator. If we can zoom into this, you'll see that there is a crossover between the blue line and the white line, and all of them are above the green line, which is the oversold level, which gives it a confirmed buy signal.
And the efficacy of this indicator for V-Guard in the past, Jayesh?
So Neeraj, all buy indications in the last 1 year would have resulted in 25% gain.
25% gain over the last 12 months if all buys indicators are taken into account. Jayesh, thanks for putting that into perspective. V-Guard Industries, quite out of favor, I would say. The stock corrected quite a bit to post the results, but maybe, just maybe, there could be some bit of a trading upside here. I don't know about the fundamentals out here. Samir, do you track V-Guard at all?
Not that closely.
Okay, so let's leave it out, not a problem.
Majorly what is happening over there is, whatever we've understood, it's a rebranding system, and they're moving from a one product line of being a stabilizer or dominated company to different consumer products, which is aiding their margin. And then the valuations go upsurge. Like last 1.5 years and 2 years, the valuations have really stretched up, and that leads to any downside risk after quarterly results, which doesn't meet the analysts or doesn't show that kind of a growth which was showing on the previous quarter. So people, rather than comparing YOY, go on for a quarter performance, which eventually someday will hurt you, and it brings the stock down by 15-20%.
Yeah, well, it's done that. I think the last 3 months it's been about 9% down. The last one about 13% down. The stock is corrected quite a bit already. What else, Ashwin?
Apart from it, let's see some of the other stocks that we need to watch. Reliance heading towards new highs. Samir, any view on Reliance? Would you buy it at this level?
So we've been buying Reliance around 900 levels, adding it rather than. So what happened in Reliance that past few months, the large cap IT have been taking the flows into the stocks from the FIIs and domestic investors. So that has been pulling the valuations of the Nifty or stabilizing the Nifty. Now the valuation and the whole flows will have to shift to Reliance also, as well as you mentioned. But if you see fundamentally, their E&P commitment on their annual report gave a trend towards a further capex coming in and the expansion of the capacities at the refinery margins. And the other part which I'm more bullish is on the Jio. Even after attaining 15% of market share, their aggressiveness hasn't gone off. So if you see past couple of months, they've started with postpaid, and they were not present in the postpaid scenario. So that will lead to another 10 to 15% kind of a market share if they really want it. Because postpaid, if you see in urban areas, has much higher market share than prepaid. So over there, they will capture that, and if they capture that, the cash flow generation becomes much more cleaner for them. And they'll be able to still charge you at a lower cost, but create an efficiency of that 10 rupees, 9 rupees per GB and charging you around 15 rupees. So that 5 rupees of margin till the time they maintain, for which the others it's a difficult thing. So I think I'm more positive on the Jio and the cash flow generation from the E&P business.
Okay, so that's the view on Reliance. Let's also get in a technical view on Reliance. Amit, what's your view on Reliance? Do you think that the uptrend will continue and it can surpass its all-time high in the next few sessions?
See, even if you look the Reliance from the 2 months perspective, the stock is projecting you a target of around 1060, even on conservative side. So we really think that even with very less expectation, you can easily see stock surpassing 1050 levels. Now, major long build up in this counter is at around 945. So from a momentum perspective, as long that level gets hold on to, this rally could easily extend towards 1020 in 1 to 2 days time frame.
Interesting. That's Reliance Industries. In fact, continue with chart checks. We haven't taken them on Sun Pharma and Sun Pharma Advanced Research, both stocks which went up quite strongly. Ruchit, any thoughts here? Spark, more importantly, but even Sun Pharma, if you track both of these on the charts.
Neeraj, I would like to take Nifty Pharma Index first because if we see this index, then on the weekly charts, the index seemed to have probably formed a good bottom around 8,000 kind of levels. So I think this, in the next few trading sessions or in next few weeks, we should see this sharp up move which we had seen on Friday in most of the pharma counters. That should probably continue in short term. So I think from a short term trading perspective, entire pharma sector could be buzzing, where we should see good amount of up move. Yes, coming on specifically Sun Pharma, then we had seen that on Friday's session, the up move in the pharma stocks was led by Sun Pharma. It was the Sun Pharma first who led the up move, then it was followed by some other mid caps and then mid caps as well as the large cap names. Now the volumes that have panned out recently in Sun Pharma on the daily chart, the up moves have been supported by good volumes after a long period of time. So I think that's quite a positive sign. This should lead this stock further higher in near term, or maybe up to 550, 560 kind of levels. So from a short term perspective, definitely Sun Pharma looks positive. Any declines towards 510 to 515 range, that should be ideal levels to buy this stock, because the risk reward ratio would turn favorable at those levels. So look to buy Sun Pharma around 510 to 515, keeping stop loss below 480 and expecting target around 550 to 560. And Spark, we have seen that when Sun Pharma gives a sharp up move or down move, then Spark usually reacts in the similar direction. In Friday's session, we had seen even this stock moving higher by very good volume. So I think there should be a follow-up momentum. Now the stop loss, or if you are looking to buy any fresh position in Spark, then the stop losses are too high because this stock usually shows greater volatility than Sun Pharma. So I think if one has to choose any of these names, then I would prefer buying Sun Pharma.
Anything else in the pharma space that you like, Ruchit?
We have also advised Lupin to our clients because although this has been one of the underperformers within the pharma space, but the stock seemed to have formed a very strong support base around 720. During month of March, the stock took support around 720 and gave a pullback move. In spite of the stock taking a corrective move post the results, also in the month of May, the stock took support around 720 and has shown this pullback move. Now 89 EMA has been crossed for the first time since many months in Lupin. So I think this would be one of the stock which would head higher towards its 200-day moving average, which is around 870. So Sun Pharma and Lupin, these are the two stocks which we believe should lead this pharmaceutical sector further higher.
Interesting. Samir, for somebody who wants to put fresh money to work, is there a large cap or a mid cap idea, maybe even a small cap idea that you have, your favorite?
So there's a small cap, it's called Gravita India Limited. It generally what it does, it purchases the batteries of all these car batteries, inverter batteries, and they recycle and break them down and take out lead, aluminium and the PET out of it, and they sell it off to the contract. So they have contracts with B2B. So they're not a B2C business, they are B2B. So they have contracts with Luminous. They have now a supply agreement with Amar Raja. They have 2-3 more contracts coming into place. So they do around 800 crores kind of a sale, and they have around 7% of a EBITDA margin coming in out of that. And they do what is happening, they have a lot of international operations. So one of their Ghana plant, which was around 5,000 metric ton, that is being expanded to 45,000 metric ton. So that is resulting in the margin pressure, because what is happening, whatever they are buying at Ghana is getting imported to India at a higher forex. So that is putting the pressure on the cost of goods purchased. Once that will be online in September 2018 or October 2018 as per the management, once that comes in, I think there will be a huge upside on the margins and the volumes itself.
Okay, and we'll ask you point 2 about the rationale and the valuations in a bit, Samir. Just seconds from now, the markets, the pre-open rates start to kick in. Let's just address that for a moment. Then we'll ask part 2 of Gravita India and why Samir believes it's a good investment candidate. But here's what the markets are doing in the pre-open session. Remember, the SGX Nifty had shown that we'll start off maybe 0.25% higher. Asian markets are fairly much in the green. So the start, well, marginally in the green, but this will settle down in the first 8 minutes. Want to see what some of the large cap names would be doing. ICICI Bank to start off with, and let's see what that boy is doing in the session today. Nothing too dramatic. Let's see if Sun Pharma and whether it's taking off from where it left off in Friday's session. Likely to start off if the first rates are to be believed in the green, but let's wait and watch. IOC HP. Looking slightly off. It's a 13th straight day of a price cut. Not that will have a meaningful bearing, but just mentioning that IOCB PHP look like starting off on a weak footing. Maybe LNT could start off on a strong note. Let's wait and watch if these stocks manage to do this or no. But Sun Pharma clearly from the large cap space looking like starting off on a very good note. Darshan, what are you spotting?
Yeah, so Inox Wind is down 20%. I don't know, the numbers were already audited, and still I think it's become more of a fear psychosis. Inox Leisure is up in trade, but Inox Wind is showing a downtick of 20%. Somehow I think Bajaj Auto can't be down 6%. It's showing me a downtick of 6% currently. So it's a down 4%. That's what I'm saying. 1% on lower circuit, quality on lower circuit, and the quality promoter has been buying from the open market every day. That comes on the exchanges. Then also support is not coming in for the counter. JSW Energy is down in trade currently. Among the gaining side, Welspun Corp is up almost 6%. They backed that big order. Kaplan Point is up 8%, and the trend continues. Wakarangi is moving higher. Natco Pharma, because of a launch of a product, is up almost 4% in trade. PC Jewelers starts in the positive. United Breweries again starts in the positive. Probably United Breweries will be at a fresh lifetime high if these rates stabilize at this level. That's what I'm looking at this point of time. Yeah, but I think we can get back to Gravita and the rationale.
Yeah, okay. And just by the way, just before we get to that, the currency and the bond yields, those markets have started to just mark what the rupee is up to, what the bond yields are up to, 67.43. So that's a lot more stable. In fact, marginally higher than what we were left it off in Friday's session. And the bond yields will come up on your screen as well. 7.972. Touched 8% in Friday's session, currently at 7.97. But before we move any further, Samir, you were making a point about Gravita. One is what they're doing and whether there will be margin uptick. Two, what about the valuations?
So valuations right now, they're trading around 25 times FY20. Now if you see the valuations, the suppression has come because of the reason which I've given. So the margin has suppressed because of the imports which they are doing at a higher forex cost, and they cannot stop it. Now the only point is when it reverses, the valuations automatically adjust to 18 to 19 times because the volume grows up and even the margins on that volume helps out. And they have a 1:1 debt to equity. That is mainly because of the new capex they are doing on the books. So on consolidated basis, they don't have that kind of a working capital issues because the contracts are 30 to 60 days kind of a payment which are helped out internally. So they don't have any working capital debt to service the contracts. So I think these 2-3 triggers are there for the next 6 or 9 months to help out. And it's a good time to accumulate when these kind of issues or restructuring is happening at the company. There can be a certain downside because the mid caps are facing certain kind of selling pressure. So it can be a SIP stock, let's say, in that certain sense, where you start accumulating in bits and pieces and go up for a longer growth, kind of a 5 years kind of a return to come in.
Okay, we'll watch out for that. So Gravita India is the fundamental call for the day from Samir Kalra. Let's get in Sumit Sarkar a couple of minutes later than usual, but he Johnson with the big brokerage calls for the morning. Sumit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Emkay on Sun Life. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 270, which suggests a return potential of more than 25%. Now according to the brokerage, Sun Life is a compelling play on the recovery that is being witnessed in the global research and development spending among the pharma companies. Along with this, consolidation seen in the global clinical development and manufacturing organization is another growth catalyst when it comes to Sun Life. Now there has been consolidation in both clinical research organization level as well as in the API manufacturing level, according to the brokerage. Now, the company has enjoyed highest EBITDA margin in the CDMO business, and going forward, the consolidated EBITDA margins of the companies are expected to remain stable at around 29% over the next 2 years. Overall, the brokerage is expecting the company's revenue and net profit to grow at a compounded annual growth rate of 10% and 19% over FY18 to FY20. Second we have is ICICI Securities on Mindtree. Now, the brokerage has maintained its reduced rating on the stock but has raised the target price to 955 from 800. Now, according to the brokerage, a strong deal momentum will help the company sustain revenue growth in the first half of financial year 2019, but for the second half, the brokerage is expecting this momentum to slow down as the order intake would not sustain at these elevated levels. Now, the acquisitions done by Mindtree are showing gradual improvement when it comes to the top line. However, achieving a steady state of EBITDA margin of close to 8 to 10% will still take time, according to the brokerage. Now, the brokerage has revised its target price as it believes that there are multiple levers for margin expansion for the companies, like the INR depreciation and lower drag from wage hike, which would drive the margin expansion for the company going forward.
Okay, many thanks for that, Amit. We'll watch out for Suven Life as well as the Mindtree. Samir, any view on the mid-cap IT space? Mindtree, ISEC believes that the growth momentum in the second half will be slower. Other counters, like KPIT, Tata Elxsi, all of them are doing well. Anything in particular that you like on the mid-cap IT front?
So if you take out Tata Elxsi, that is our preference in the whole area, and Persistent over there. Two reasons: Persistent is facing the IP issue, so the valuations are getting more rationalized and they are more reasonable, and this, I believe, is 1-2 more quarters kind of an issue, and it will start coming into the base. If you say Tata Elxsi, they are doing much more product oriented systems and they are much more into the auto end of the systems. So I think that kind of two companies we are better off. If you take the others, they've run up quite significantly in past 6 months, especially when the large cap IT took a toll. So what generally happens when the flows start coming into the IT, the mid cap IT valuations really spikes up, and before the results, they start coming off. So because the valuations have already gone ahead and factored in a good amount of growth, any kind of a result disappointment results into a downside which doesn't stop very quickly. So I think that will happen in the mid cap, and you have to be very selective in mid caps throughout, I think.
Okay, we'll ask a technical guest on the mid cap IT space, especially Tata Elxsi. Amit, what's your view on Tata Elxsi?
Well, I think the rally can easily extend towards 1285 to 1290, but again 1200 would be a very crucial support. If that gets broken out, one should exit long positions. In mid-cap IT, we like Mphasis because we think now Mphasis is positioned for a target of around 1250 to 1230. So what we would recommend, rather than going long on Tata Elxsi, one should buy Mphasis with a stop of 1050 because build-up is extremely strong on the long side. So quite positive on Mphasis.
Interesting. As the first 8 minutes draw to a close, or in fact have closed, Bajaj Finance continues to rise and shine. So that's the top gainer on the index, and therefore at new highs. Adani Port goes up a little bit. They have refinanced some of the high cost debt. That stock is higher. IndusInd Bank about 0.5% higher. And let's bring up Saskane Communications. Since we were talking about mid-cap IT, Saskane hit fresh highs in the session in Friday's trade. In today's session, starting off a slightly muted tone. Okay, let's get in one more fundamental voice. 6 minutes left for the markets to kickstart trade. Sindhu Samir, co-head for equity sales at Emkay Global Financial Services, with us on the show. Sindhu, good having you. Thanks so much for joining in. What's been the advice to clients? We've been chalk and cheese, and this week is fairly important from a global perspective. No reactions to G7, but the US, North Korea meet, the Fed meet, and the ECB all lined up. A data-heavy week, this one.
So the advice remains consistent, buy quality, and just don't bother too much about the macro. Just 6 months back, North Korea was a big problem, and lo and behold, we have the American president and the North Korean leader meeting in Singapore. Oil was a big issue just 10 days back. Oil also has moderated. So there is little we can do about the macro. The main thing we can do is to go for great micro. So buy quality, stay put, stay invested. A timeless classic advice which was there 6 months back remains consistently here.
Okay, good morning Sindhu. This is Darshan here. Which are these quality stocks that you're talking about? Which are the frontline stocks that you're recommending to your clients?
So I cannot talk about the stocks, but as we have been talking repeatedly, is that consumption is one space which definitely will offer some further upside. And if one can look towards India in terms of consumption, a 2.5 trillion economy going to 5 trillion, this is one space definitely which will remain in the center of developing returns for the next 1, 2, 3 or 4 years. Otherwise, just we have to look at the individual and his needs and what he's consuming, what he will require in the days to come. So the super macro is the growth of Indian economy, which at the time of when the reforms were initiated in 1991, which was a sub 500 billion kind of economy, which is already 2.5 trillion economy. And if it averages out at even 6%, not even 7%, so we have a particular level of economy which will emerge in next 10 years. So an individual will be at the heart, at the center of this economy, his needs, his requirements. I cannot go further than that. But yes, consumption will be one big space. And I don't want to define consumption only in a very, you can say, a narrow definition of FMCG. It will be everything. It will be auto. It will be many other things. So look at this space. I think investors will be reasonably rewarded in the years and days to come.
Okay. Sindhu, hold on to that thought. We'll talk more about this in granular detail as well, just try and take in some takeaways. But minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. ICICI Bank and Chanda Kochar face probe by its regulator, Securities Exchange Commission. The US markets watchdog has sought more details from SEBI, according to an Economic Times report.
Phoenix Mills has acquired an under-construction mall in Lucknow with a leasable area of 9 lakh square feet for 453 crore rupees.
In bulk deals, Baron Emerging Markets Fund sells 1.3% stake in PVR, while Girik Wealth Advisors buys a small 0.92% stake in Worth Peripherals.
On the brokerage radar, Emkay initiates coverage on Sun Life with a target price of 270. Resurgence in global innovative spends is the key catalyst why they have initiated.
Who's meeting whom? PI Industries, Gujarat Pipavav Port and Mahindra Holidays to meet fund houses and analysts today.
And watch out for PNB as it looks to divest stake in PNB Housing Finance, ICRA, CRISIL and BSC.
Okay, so those are a set of stocks to watch out for. About a couple of minutes left for trade. We'll get to the top stocks in a bit. Just a couple of trenders really. Amit Harchekar, Bajaj Finance, 1% higher, 2210. Is there a possibility of a trade here?
Yeah, still it's a very strong buy. It's almost has given a very strong breakout. So we are expecting target of around 2325. So strategy would be buying with a stop of around 2175.
Interesting. Ruchit, ICICI Bank looks like starting off on a weak footing today. What is your call here?
I think from a short-term perspective, one should look to avoid trading this stock, because since last couple of weeks the stock has formed a range. There is no higher top, higher bottom structure on the stock. So I think the undertone would continue to remain a bit negative. We could see levels around 278 to 298, this 20 rupees range for next few weeks.
Okay, and Ruchit, what's your view on, if you're looking at some of the counters, what's your view on Infosys? IT seems to be doing well for the past few days. Infosys, any view?
Certainly the uptrend still continues in this stock. In fact, if we see the momentum readings, they are still not in the overbought zone. So I think this momentum that we had seen during last week is likely to continue in near term. We could see levels around 1295 to 1300 maybe next 1 or 2 trading sessions itself. So even at current levels, from a very short term perspective, that is from next 1 to 2 days, one can go long keeping a stop loss below 1230, expect target around 1290 to 1300.
Okay, 52 seconds for the markets to open. Amit, what's your top call for today?
Well, I would go for Hero MotoCorp. Again, we are expecting a VWAP breakout in this counter. So target would be around 3780 and stop loss for your long trade would be 3550.
Okay, 3780 is the target price. And Ruchit, what's your one top pick for today?
I would again recommend Lupin even for intraday. Although the earlier levels we spoke about the position, but from an intraday perspective, one can go along with stock below 785 and expect target somewhere around 840 to 850.
Okay, we'll watch out for these stocks. Gentlemen, stay on. So much more to talk about. We'll take in some opening thoughts from you and then continue our conversation with Sindhu Samir. But 9 seconds left for the markets to kickstart trade. Expect a mild bit of green. The Nifty Bank, though, will likely start off very, very flat. The question only is whether it can pick up from there. So it's a flat start for all the key indices, more so for the Nifty Bank. It's starting absolutely flat. Actually, the Sensex and the Nifty too, completely quiet start. Doubt that the mid caps will be doing too much. Bobbing between the red and the green. Yeah, the mid caps and the small caps about 0.25%, so nothing too dramatic. Again, doubt that the Nifty 50 will be showing some dramatic moves, but let's pull up the heat map and see. Green dominating the screen, which is, well, from a bull's perspective, not a bad sign. But ICICI Bank slightly weak. I don't know if it's got to do, I presume it's got to do with some sentiment around this US probe, but really don't know if it has a dramatic impact on the stock price or no. But for now, or the fundamentals of the stock, but right now, it's certainly down. What's gained? IT seems to be doing okay. Tech Mahindra and HCL Tech doing okay. Sun Pharma continuing from where it left off, so good start to Sun Pharma as well. And private banks, save for ICICI Bank, Yes Bank, IndusInd Bank seem to be doing rather okay. Reliance Industries marginally in the green, very close to its all-time high levels, now 0.5% higher. So good start from a bull's perspective, nothing too dramatic, but fair bit of green and about 0.25% higher for the Nifty despite no participation from the banks. So let me pull out some individual pockets and try and highlight one or two before I hand it over to Darshan for all that's happening at the broader end of the spectrum as well. Firstly, some big gainers in Friday, Sun Pharma and Sun Pharma Advanced Research, and both of them start off marginally higher. Remember, 12% for Spark in Friday's session, about another percent added. Sun Pharma 2.25% added, so good start for both of these names. What about some of the others? There are stocks which gained dramatically in Friday's session, the PSU banks, but all of these start off very, very flattish. Dena Bank, Allahabad Bank, UCO Bank, all of them had a minimum of 7-8% gain, but start off on a flat note right now. So no big moves for these stocks in the session today. Moving on to the sugar stock, and the prices have bounced back quite strongly, and the stocks too are doing well. So Dhampur about 3.5% higher, more sensitive really to sugar prices because of the debt levels. Shakti Sugar too about 3% higher, and Balrampur Chini about a couple of percentage points higher. So, well, some green. Let's see if it lasts for the sugar names. Darshan, what are you spotting?
Okay, some of them on my list. Kaplan Point is up almost 7.5%. So that one is buzzing in trade. Avanti Feeds, the recovery continues, again back close to the 1900 level. It's up 6% in trade. The ASM stocks, GVK Power, Rain Industries, both of them doing well. Rain is at almost 240 currently. Phoenix Mills continues its good trend after the acquisition of the mall, and positive commentary to investors in Singapore. You have Natco Pharma, which is doing well. Balrampur Chini, as you pointed out, sugar prices seem to be doing much well. It's doing well. Continuing its good run from Friday is Strides and Suven. Both of them are doing well in today's trade. So that's on the gaining side. On the losing end, Inox Wind continues to be in focus. It's down 5% given the fact that the auditors have resigned. Quality continues to go grind in lower, so it's now below the 30 rupee level per mark. PNB Housing Finance is down in trade. Both Carlyle and PNB are looking to sell stake in the company. That is probably weighing on the company. Manpasand, the circuit has been opened. It's down 1.5% in trade. And a couple of the auto names, Ashok Leyland I'm spotting is down in trade, and CV Finance or Shriram Transport is also down in trade currently.
Yeah, well, but good start for select private banks. Kotak Bank, for example, is up about 0.7%, and IT certainly making a very good start in the session today. HCL Tech and Tech Mahindra are amongst the top gainers on the Nifty. The broader end of the spectrum not having too many IT names, but nevertheless, IT seems to be the space that is looking good at the start of the trading day currently. By the way, First Source is at fresh highs. Avenue Supermarts is at 1600 fresh highs. Infosys is at fresh highs. Manali Petro, a stock which went up dramatically in Friday's session, is also at fresh highs. Opening thoughts, gentlemen. Amit, Harchekar, to you first. How is the start looking like? About 1/3% for the Nifty. The Nifty Bank 2/4%. Any trades here? And if there is any stock that pops up on your screen?
Well, I think Nifty still remains a very strong buying candidate because it has breached levels of 10,678 on the future side quite convincingly. So now from an intraday perspective, it becomes again a good buy for a target of around 10,880. Stock specifically, now we think HDFC Bank, which has seen good amount of correction, now should go up. So the strategy what we would suggest is buying HDFC Bank 2060 call and simultaneously selling to 2100 call. So in this strategy, your premium deployed would be around 15 rupees, and we are expecting as HDFC Bank moves towards 2100, the premium should rise towards 35 to 38. So HDFC Bank, we believe that should provide a good backup for the markets in the short term.
Richard, what about you? The start looks good. What would you be doing on the indices? Any stock that pops up on your screen?
Yes, certainly the opening looks to be positive, when what is seen that on Thursday where the gap up opening that we had seen, now that has become a strong support. So what earlier we were talking about the supports of 10,650, they will now shift higher to 10,700, which is Thursday's gap area. So any existing long positions, or if one is creating fresh long positions, the stop losses could now be trailed higher to 10,700, and on the higher side again 10,880 to 10,900 could be seen in the next 1 or 2 trading sessions. So definitely one should have a positive bias. Among stock specific, Godrej Industries post opening, it seems to be a positive, because recently we have seen this 608, 610 has been acting as a resistance. So if we get a breakout today above 608, then one should look to buy Godrej Industries. Right now price is around 604, so above 608 buy Godrej Industries with a stock below 595, we can easily expect target around 645. So the risk reward ratio would be very much favorable for this.
Okay, many thanks to both Amit and Ruchit for joining us on Bloomberg Quint and giving their perspective on what they believe is the technical side of the market. Sindhu Samir is still with us. Samir, what do you make of the pharma space post the big move that we saw on Sun Pharma? Most of the pharma stocks have started doing well. Do you believe that the uptrend is here to stay?
See, it's very difficult to say that the uptrend is here to stay. But if one has a contrarian streak in him as an investor, then these multiples are fairly reasonable. Of course, there will be pricing pressure and it's not going anywhere. But apart from the pricing pressure in the generic US space, there is a vast Indian market. Now, if you look at the growth rates of the domestic market, it's fair bit of hope and faith out there. So the multiples have meaningfully corrected, value has emerged, but one as an investor makes returns when the value gets catalyzed. So we have seen a development in Sun Pharma, but going forward we need to see that what kind of value get catalyzed. From a contrarian level, yes, one can definitely look at pharma bellwethers, but it's very difficult to say that you invest now and you'll reap returns in next 1 or 2 quarters. So one needs to have a bit of leap of faith on the name, but of course in the entire space the multiples have definitely corrected in last 3 or 4 years.
Sindhu Samir, IT stocks, the last 6 months have been a revelation of sorts, or say 8 months have been a revelation of sorts, in the sense that they gain quite a bit, then they haven't corrected too dramatically, save for maybe a 5-10% correction that we saw in some large caps, but they haven't really corrected too much. And now with the currency tailwind, even if it's sentimental in nature, they are gaining ahead in trade again. What is your fundamental thesis on IT, looking at all that's happening on the business and then the technical factor of the currency?
So there is a large pie, which was IT space. That pie is not growing dramatically. The IT opportunity, which it was 10 years back and which was 5 years back, is not that much, for the sheer reason that the size of Indian companies has grown to a level that a percentage growth of 10, 15, 20% is just not possible. So in that overall pie, which is not growing at a very massive pace, you have opportunities, and they were available 6 months back in the IT mid-cap space. Now, since there is a lot of concern about other sectors and markets as a whole, and with concerns on currency, it is offering a very reasonable defense. But if you look at the pharma large cap, there is not much of growth happening out there. So in terms of defensive play, one is welcome to stay invested, but that's advice more for a portfolio investor, an institutional portfolio investor. For an individual investor, definitely pharma mid-cap opportunity was there, but the easy pickings, the low-hanging fruits from there have been plucked. So it is a great defense, especially the pharma large cap. In terms of pharma mid cap, I think the best has already been over. So there will be returns, earnings-led growth will be there, but in terms of re-rating, I don't think so. There is much scope to be left, both in the pharma large cap, IT large cap and the mid cap space.
How do you guys view this spate of resignations by auditors? I know it's very company specific. In certain cases, the auditors have resigned because they didn't have time to audit the books. But you know, it's something that we haven't seen in the past, Sindhu Samir, a recurrence of this nature, even though the reasons may be starkly different. And the market seems to be a bit nervous around these happenings. How have you read into it?
So it's not that that we look into the resignation of auditors. It is look at the overall thing. It is about the management quality. It is about the quality of earnings, and it's the overall corporate reputation. So we have not seen much of it in previous years, but yes, we have been witness to many negative developments out there. So basically, it's coming back to the same old saying that buy quality and buy great managements. So it is essentially a call on great managements. My advice to both to institutional and individual investors is that if the quality of corporate governance is high and has been consistently higher and has been historically higher, one is liable to see these kind of negative developments at a relatively low pace. So in terms, investing at the end of the day is a game of probabilities. So if you are buying a company which has high corporate governance, it does not eliminate the probability or a potentiality of seeing these kind of developments, but definitely it brings it down. Let's go back to 2001 and 2002 in America. Even Enron saw some kind of a similar development. It's not that these things only happen in India. It's just that the probability can be reduced by consistently going for great companies which have a track record of good corporate governance. So the operative words are track record.
Yeah, that's for certain. Okay, I'm looking at the list of companies which are hitting those highs. Sindhu Samir spoke about consumers at the start of the conversation, and he said that he doesn't want to bucket them down into any specific pocket, whether it's FMCG or otherwise. But Sindhu, nevertheless, let me try and bucket them down, even though you advise not to, because there are some 5 or 6 buckets of consumption, right? What do you think will do better? Because I understand staples have this consistent track record, but the valuations are just at the higher end of what is the average multiple as well, which was 44-45 times, say, for an HUL or some of the others. Britannia too has really ramped up the lines the last few weeks or quarters and has trading at new highs. These are not cheap stocks. Would you be more comfortable with the staples, or would you go out and look at the other buckets of consumption?
So anyway, you are trying to put me into a binary kind of a situation.
No, I'm not. I'm just saying what will give a better bang for the buck.
The idea. One needs to balance the return and risk. So obviously these companies are not cheap. Definitely not cheap. And obviously these companies were at a particular multiple 10 years back. I mean, you can always say that in 2006, 2007, I distinctly remember the same set of companies were at 60 or 65% of the multiples at which they are trading now. But the point is this, we are looking at a situation that they will be having same level of growth. So in terms of, if we assume that the growth will be similar, the multiples are higher. But basically what the market seems to be betting is that in the years to come, that the growth rates will improve. If you look at that way, that the multiples do not look as expensive as they are. But at an absolute level, they are definitely expensive. Now, consumption is all about definition. So staples is one subset of the superset known as consumption. there are so many other consumptions. Look at what's happening in autos. So if growth might not be very spectacular in staples, look at the growth which is happening in autos. It's very reassuring. Consumption can be anything, even a domestic pharma growth story is essentially consumption. So it's what you define as consumption. There are pockets of expensive growth, but then they give you 10-year, 15-year, 20-year kind of a multiple visibility. And when you actually broaden your horizon to that level, these are not very expensive multiples. Finally, in India, there are hardly 70 to 100 kind of quality companies. And the market has this tendency to give them super valuations. But if we are not betting for derating, even the earnings compounding of 17 to 20% is not a bad thing. The operative words are that we are not betting for a derating. So if we are asking for a derating, then these companies are expensive. If we are assuming that there will be no derating happening in the years to come, then the earnings compounding of 20%, and that earnings compounding on an average is happening at a ROE of 30 to 70%. So there are clouds, they are very good clouds, but they are getting seeded by a very high ROE. So are these companies really expensive if they have high ROEs, free cash flows, and an Indian consumption class which can get from marginal status to a consumption status for next 15 years also? 30% of this country is still poverty, so which means they're not consuming anything much. So if 1 crore people still keep on getting into the consumption class, so what are we looking at? So that is the kind of thesis market seems to be building for these companies, and that's why these multiples are so expensive.
Okay, Samir, thanks so much for taking the time out and joining us on a Bloomberg Quint today. But Neeraj, one stock that we need to point out, Nestle, 10,000. So that's a number. I think post Maggie, no one thought that, these numbers will be coming through, but Nestle is about 10,000 level. So it's an F&O stock also. So volumes are much higher, but it's at 10,000. That's the big story also.
There's something here. So Nestle 10,000, Reliance, Darshan has been speaking about it, very close to 1,000 yet again. Avenue Supermarts now comfortably over the 1 lakh crore market cap. Lots happening in the Nifty too, 10,800. So good going really for a clutch of names. And no surprise there, a lot of stocks at new highs too. Take a break though. On the other side of the break now, we'll talk about two pockets which haven't really done dramatically well over the last couple of quarters. First, start off a conversation with Sanghi Cement to talk about cement companies and whether they can, stand strong again with a little bit of help from the government expenditure in the election year. Bina Engineer from Sanghi Industries joins in to speak about that. We discuss DLF's recent attempts at shedding debt and get a progress report on its new projects with Executive Director Saurabh Chawla. They gave very positive commentary at the Morgan Stanley conference. We speak to Saurabh about that. Stay tuned. Welcome back. You're watching Indian Open right here on Bloomberg Quint. Cement volumes may have been on the rise across the country, but pricing power seems to have remained elusive, at least for the first 5 months of 2018. And with monsoon already covering Maharashtra, would construction activity become much slower than what it was in the first 5 months? And we are less than a year away from the general elections. Does that reverse if there would have been a trend in the monsoon season as well, with the sharp rise in government spending on public infrastructure and social dole-out? So is there a silver lining beyond the clouds, or are there clouds in the first place? Joining us to talk about all of that for the first 6 months, the rest of the year, and the quarter for Sanghi Industries individually as well, is Bina Engineer of Sanghi Industries. Ms. Engineer, good having you. Thanks so much for joining in. First off the blocks, let me just get a clarification on a piece of news. Then we talk about the quarter and the year ahead. Have you cut prices in Mumbai by about 15 to 20 odd %? There was some news about how prices in Mumbai by across the cement companies have come off.
No, Sanghi specifically has not cut off any prices since May. Our prices have been consistent. But apparently the prices keep differing from the buyer to buyer and from the whether trade, non-trade, etc. So there are different price ranges. But apparently we have not cut the prices. At the same time, yes, you are right that with monsoon coming very soon or has almost arrived, there would be impact on the price as well as on the volumes.
Actually, so can I ask you if you are already seeing that? Because now a meaningful portion of your sales compared to what was in the past does come from the Mumbai market as well, I presume 10% odd. What is the scene looking like? Are conversations with companies that you supply your bulk cement to talking about a bit of a lower dispatch scenario over the next 3 months?
Yes, it is seasonal. Cement has always been seasonal, both in terms of volume and prices. So that impact is expected. The construction work goes down with a very heavy monsoon, which is there in the Maharashtra-Mumbai belt. So that is expected. But it is nothing which is different from all the past years. And you are right, it's a good news in fact that we now take almost 10% volume from Maharashtra and Mumbai. And we have gained a good foothold. Our coastal shipping experience has been successful, and therefore Mumbai does form about 10% market for us.
Okay, we'll talk about that. Let me try and address a couple of concerns that, while researching the company, I also had, my analyst Nikki had, and some of the brokerages have had. Your clinker sales for Q4, about 0.53 MT. Total cement and clinker sales, if I'm not wrong, was about 0.61, which I believe also included some portion of export. Now, I understand there was a shutdown for 15 odd days, which would have impacted these. Are we to presume that Q1, because there wouldn't have been a shutdown in Q1, will see these numbers come back to normalcy?
Absolutely. So we commissioned our Westit recovery project in the quarter of March, and for that as well as for our raw mill upgradation, we had taken a fortnight's shutdown in the month of February. And so it was a one-off event, and during this quarter things are back to normal. We should see a positive growth compared to the June 17 quarter.
Okay. The issue though, Ms. Engineer, is that for a company which is on the growth path, which almost everybody believes you are, correct me if I'm wrong, but for the whole year, there was a decline of 14% in blended cement sales, about 6 to 8% in pure cement sales. Was that also a factor largely of what happened in Q4? Or do you believe FY18 as a year has been patchy for you?
No, I think the main impact of volume loss occurred only in the Q4. Up till Q3, we were very much on that track, and we had been anticipating decent volume comparable to the previous years. But Q4, the production loss of 15 days and the corresponding cement volume loss was a setback for the volume as such. But that doesn't deter us from the growth path which we are pursuing. And we anticipate that the current financial year, we are still very much on the track, and we would do as we had anticipated.
So what was anticipated? Can you give me some numbers out there, Ms. Engineer? What do you expect? If everything goes as per normal, what do you expect FY19 to end with in terms of volumes?
About 3 to 3.2 million ton.
Okay, and I believe you, okay, so 3.32 million tons for FY19. And this would happen at what utilization levels, Ms. Engineer? I believe Q4 would have been partly lower blended utilization. How much would that be for Q1 and maybe for the year FY19?
Typically, Q1 and Q2 will see only about 40% of the year's volume, and the third and fourth quarter would see about 60% of the volume. So currently, we are still clocking about say 65 to 70% range of the capacity utilization, which by the year end I would expect to go up to 75%.
Okay, so 75% for the year end. Maybe the blended could be slightly lower, and which gives you ample room to increase production should there be demand as well, I presume. The other point, Ms. Engineer, would also be about the operational metrics, right? For Q1, aside of the shutdown, fly ash and outside clinker, all of that impacted your margin situation. How is the scenario right now? And do we expect for the year as a whole, you get back to what you were clocking in better part of FY18, which was about the 20 to 23% EBITDA margin range?
A word of caution would be that diesel prices and the energy prices have gone up. So that would have clear impact on the industry, and if you see Q4 results across the industry, everyone has clocked below 20% margin, and nobody has touched even 1,000 rupees EBITDA, which has come up from a good of 1,200 to 1,400 range for some of the other players. So given that, yes, there is an impact on the squeezing of the margins across the industry, and we are no exception. Flash availability, we hope that should improve in next quarter or so. So that impact I would take away, and apparently the shutdown and other impact are not there. However, at the same time, as I say, diesel as well as the coal and energy prices basket has definitely gone up. We saw a news item saying that the load which a truck can take, that XL load is being revised upwards, and probably that would have a positive impact on the freight for the industry as a whole.
So by and large, would you expect about a 20% EBITDA margin could be a possibility? Or just give me a range if you can, Ms. Engineer, because for a lot of people who are bullish on your stock, the fact that you are amongst the lowest cost and one of the efficient producers is a big factor of what will drive EBITDA margins and thereby earnings growth. How would you believe FY19, possibly FY20 would be on those parameters?
Prices should also hold good. So far prices have held good. There would be a seasonal impact on the price in Q1 partially and Q2 the whole of it, but with the better demand, because we are seeing an improved capex from the industrial side, improved capex from the infra side, and of course the pre-election impact on the balance housing expenses, etc. So we definitely expect that the prices should remain strong in the second half of the year. Given that all of this marginal price hike or cost hike would get absorbed, and we should see a consistent margin in FY19.
Okay. Last question, Ms. Engineer. The capex plan is on track, I presume. Can you give me some details there? And would FY19 as well as a year be largely with the 4.1 million ton capacity that you have? I presume with the capacity utilization levels that you're talking about, even an additional capacity coming on stream will not really impact volumes in a meaningful way, because you're anyways operating sub-optimum capacity.
Yes, capex plans are very much on track, and we have achieved almost 70% order finalization for the project. So which is absolutely in line with what we had planned in terms of our schedule, and even the capexes which we had initiated in the previous year, like West Heat Recovery Plant, as well as our ships, the conveyor belt from the mines, all of those have been successfully commissioned in FY18. We have also done a refinance of our loans at a lower cost. So all of these will have impact also on the EBITDA margin during the FY19. You are right that there is no additional capacity which is getting commissioned in FY19. The entire project will get commissioned only by the end of FY20. So that will have impact only in FY21. And the suboptimum capacity which you point out we are performing today will get absorbed during FY19 and FY20. So we have 2 years of sufficient volume capacity in front of us, which we can absorb from the existing capacity, and by then the new capacity would be in place.
Well, the plans look solid, Ms. Engineer. We hope that the demand rises enough for you to be able to do all of these and make your shareholders happy. Thank you so much for taking the time out and speaking with us today. Have a great week ahead.
Thank you.
Well, that's Ms. Bina Engineer of Sanghi Industries chalking out their plans. They haven't spoken to anybody post the results, which was a slightly weak quarter in any ways. So now you hear it from the management about what the quarter ahead could look like as well. Some expectation of normalcy Q2 onwards. Q1, because of the monsoons, etc., will remain patchy. But hey, you know what? While everybody says that real estate activity and construction activity might slow down in monsoons, and therefore that could be a problem for cement companies, that may not be the same for real estate. And we speak to DLF, one of the largest real estate developers, very big presence in the NCR, everybody knows that. But DLF also recently inked a deal with the Sovereign Fund of Singapore, GIC, selling 33% stake in the rental arm. The 9,000 odd crores expected to help the developer become a debt-free company. And while the last quarter wasn't great, the key is that at the Morgan Stanley conference, the management spoke about how the residential market has picked up and they expect a good sales ramp up in Q1 FY19. So, well, let's talk about good news from a corporate. Saurabh Chawla of DLF needs no introduction, really joins me right now on the show to talk about, well, maybe how the quarter has been like and how the outlook ahead is like. Saurabh, good having you. Thanks so much for joining in. This is Neeraj here. Good morning. You know, we were at the conference. We saw the notes that Morgan Stanley put out post the conference. And you seem to be a lot more, you as a company, I mean, seem to be a lot more optimistic than what the street is about businesses which are largely, you know, in a manner of speaking, seasonal and get impacted by monsoons. You have said that the residential market has picked up. Give us some details here.
Well, we've been consistent in our guidance to the markets. Last year we were talking about green shoots and also the overhang, the sentiment overhang because of many of the developers going belly up. That had impacted absorption levels in many micro markets where, of course, we are present. As things solve themselves out, we see a much better environment for sales to happen, and fourth quarter of ours actually reflected that. So I would actually contradict your comment that last quarter wasn't good. Actually, if you look at our last quarter, our gross sales was more than 1,000 odd crores. So things are much better than what they were a year back, and we hope as resolutions happen on many of the companies which were in the real estate space, the customer sentiment will become much more buoyant. Last but not the least, real estate is very heavily correlated with the GDP growth, and hence as things start to move on that end also, there will be better demand perspectives for us and for other real estate companies.
Actually, Saurabh, can you, I mean, what I meant by quarter four was that by and large brokerages may be expected to do a tad bit better on multiple parameters. Maybe there were a couple of misses here and there, which is why they have said that the quarter was a miss. But nevertheless, having said that, can you extrapolate on that point? Because when we speak to at least the developers in the Mumbai region, they're talking about how the market doesn't seem to be picking up meaningfully. And here is it you who are saying that the residential market has picked up. Is it because of the regions that you're operating in versus some of the other buckets? Or is DLF as a company, by virtue of it being a large player and having the brand equity that it has, is able to do something that some of the others are not being able to?
No, I think you see, real estate is pretty much a micro market driven play. So, South Mumbai will have different dynamics versus, let's say, New Delhi or suburban Mumbai will have very different dynamics to, let's say, Gurgaon or New Gurgaon. So you have to look at various micro markets and see the guidances which the real estate companies are issuing. We usually do not issue any guidance, although in the fourth quarter we did issue a guidance where we said that we are now confident to give a steady state sales outlook of about 2,000 to 2,500 crores on an annual basis. So, things have improved, and we are confident that we should be achieving sales numbers of this magnitude as we go forward. Do also note, I mean, last year we had shut our sales because of enactment of RERA, and of course there was some disruption as GST got really implemented. So, keeping all that into account, I think FY19 would be a much better year for DLF for sure, and I'm sure for the whole real estate industry.
Apples to apples, Saurabh, when we say that residential market has picked up, at least in the Q1, one would be volumes, two would whether prices are also showing some signs of stability or a pickup as well. How would you respond to both of these?
I won't say the prices have gone up. There is enough supply available. I would say the absorptions have gone up, so hence volumes would have surely improved on a Q&Q basis. For us as a specific story, as we have completed most of our projects, barring one, actually all projects are completed, we are selling completed inventory. So the markets have actually veered towards a completed product rather than a product which is currently under construction with delivery few years down the road. So the buyers have become far more conservative. They prefer to have a completed product. They don't want to take any credit risk or a performance risk on a developer, whatever the name it may be, and hence we see demand veering towards that. So developers who are completing their projects or can give assured visibility of the completion of their products are seeing their inventory move. And as we go forward, I think this will only gather more momentum.
That's a report by Anarock, which says that the number of units being launched, the new launches absorption in the NCR region has inched up. In fact, new launches, I presume, in NCR are more than double. You just spoke about you selling a lot of finished inventory. What about new product launches? Have you guys meaningfully done some project launches in the NCR region in the last 2 or 3 odd months?
No, we have only launched one project for construction, so we are not doing any pre-sales unlike other developers. This is a project which is called Midtown in New Delhi, which is adjacent to our earlier project called Capital Greens. So that has gone, we have broken ground over there. It's more than 7 odd million square feet of residential, which incidentally is also in a joint venture with GIC. That is a project that the build out has started to happen. Other than that, we are right now concentrating on completing and delivering the finished inventory. So our focus is in a different fashion, because if you would know that now the accounting standards have changed, and hence for us capturing of revenue and profits on a POCM method would not be actually applicable. It will be on delivered product actually, so a completed method of accounting, and hence the faster we deliver and give possession to the customers, we are able to capture our revenue and margins over there. So our focus is a little different from other players, and hopefully I think that should reflect in our results going forward.
Yeah, well, we'll watch out for all of those on the next 4 quarters as well. So just one quick update. A couple of comparable peers in the last 18 odd months have had a slightly differentiated model, in the sense that they are approaching land bank owners with the prospect of partnering them by merely lending the branding and construction and revenue sharing. Age-old model, but comes to prominence in the last 12 or 18 odd months very, very strongly. Now, you are somebody who's got a very large land bank, but do you also envisage doing that kind of a model because of branding that DLF would enjoy?
No, we won't. We, as I said earlier also, and it's also reflected in our performance over the last few years, we have enough land bank for future launches, and our concentration over the next 2 to 3 years would be to complete the sales of our completed inventory, and of course do new launches from the construction perspective in various geographies. So it will be mostly Delhi and other geographies like Chennai and Hyderabad, where our focus would be. And also from the product line, the focus would be more commercial, rather than residential. So you can look at it as if we are rebalancing both geographic risk and product risk over here. The idea is or the business model now is to actually sell completed property. And hence the focus of ours would be on constructing new projects and making them ready for delivery 3-4 years down the road, overlaying the current completed inventory, which is anyways going to be sold. So we basically add layers on layers as we go forward, and unlike go on to a model where you do a lot of launches and then you start to capture POCM revenues and profits. So that is now a passe actually.
Okay, interesting. Maybe for the industry as well. Let's see. Maybe they're going to differentiate results from companies over a period of the next 12 months. One question on the rental arm as well. I think you were on record saying that you would consider acquiring completed rent-yielding assets in the Mumbai and in the Bangalore markets.
Yes, we are always open to thoughts over there. Recently, we did get a few opportunities. Things didn't work out. But we, along with the GIC as our partners in DCCDL, are open to any completed inventory or new projects that may be there in the commercial space in geographies like Mumbai and Bangalore. In other cities, we are already present, so hence our focus is only in these two cities, and we're quite open to those opportunities.
Okay, well, we will talk about your numbers when you do come out with them in the month of July. Saurabh Chawla, many thanks for joining in today and giving us this perspective, and all the best with the newer model.
Thank you so much.
Well, that's DLF. And interesting commentary. Let's wait and watch how do the results shape up over the course of the next 3 or 4 quarters. The management confident that it will show up. All the efforts they are putting up and the differentiated strategy now that they are following will show up in the results to come. The markets, well, a robust 0.5%. I say that it's a robust 0.5% because we've ended last week on a fairly decent note in the last 3 days, and we're continuing from where we left off, so to say. The Nifty Bank, which is not participating, is up about 0.5% as well, which is actually a pretty good sign. IT would still probably be doing the bulk of the heavy lifting at the start of the trading day, but stocks like Bharti Airtel, Sun Pharma, SBI have now taken center stage. It's not HCL Tech and Tech Mahindra which are the top gainers. The other stocks have eclipsed those counters right now. Airtel at 387 is certainly packing a serious punch, and the pharma stocks are up and about. Bajaj Finance at 2224 continues to roll on. It's a wrap on this leg of Indian Open. Up next is the FNO show. Stay tuned to Bloomberg Quint Live.